Dear students, in today's class, you are going to learn something about accounting for share capital. Here, share capital is the amount which is collected and invested in the company form of business organizations. You have already studied the sole proprietary form and partnership form of business organizations. Here, sole proprietary form of business refers to a business which is run by a single person. Sole means single, proprietary means ownership. That is why here whatever the amount is required to start the business is invested by a sole proprietor himself. That is why here the business which is commenced by a single person is called as a sole proprietary form of business. But the formation of this type of business is very simple. Any person can start the business because much here legal formalities are not involved. But whatever the profit he makes, that he enjoys, and whatever loss is there, he is going to bear the loss. But this what you call form of a business organization suffers from so many drawbacks. Here, first one is limited capital. Sole proprietor invests the amount of capital into the business. No others are investing in that. Therefore, here the financial position of that particular business depends on the financial position of that proprietor. That is why here limited capital is one of the drawbacks. If he wants to start a big business, if he needs additional amount of capital, in that case, if he doesn't have that capital, it is not possible for him to start that business. Therefore, limited capital is one of the drawbacks. Next one is unlimited liability. What is the meaning of unlimited liability? In case if the sole proprietor suffers heavy loss, in that case, he not only loses the business properties, but also he loses his personal assets. It means here if the business assets are not sufficient to discharge his liabilities, in that case even his personal properties are to be disposed of. Even his personal properties are to be sold out in order to pay off the outside liabilities. Yes, he not only loses the business properties, but also he loses his personal assets. It means here if the business assets are not sufficient to discharge his liabilities, in that case even his personal properties are to be disposed of. Even his personal properties are to be sold out in order to pay off the outside liabilities. That is why this is one of the drawbacks of sole proprietary form of business. Properties are to be sold out in order to pay off the outside liabilities. That is why this is one of the drawbacks of sole proprietary form of business. Next one is partnership form of business. What is a partnership form of business? As the name itself indicates, see, partnership in the sense it comes into existence by an agreement. As per the Partnership Act of 1932, if two persons are there and if they are willing to start a business and both the persons have attained the age of majority and other conditions which have been mentioned in the Partnership Act of 1932, they can enter into an agreement and invest the amount of capital as their agreement, and they can start the business. But here, in case of partnership form also, so many drawbacks are there. Here, first drawback is the limited capital. Here also the partners, if they want to start a large scale business enterprise or large scale business undertaking, if they need a huge amount of capital, it is very difficult on their part to collect that much of amount. That is why here limited capital is one of the drawbacks. And in case of partnership, unlimited liability is also the major problem. What is the unlimited liability? Here also, if the business what you call assets are not sufficient to discharge the outside liabilities of that particular partnership form, in case of loss, the personal properties belonging to the partners will be taken into consideration and the liabilities of the partnership firm will be paid off. That is why here also the threat will be there to the partners of losing their personal properties. Therefore, unlimited liability is one of the drawbacks. In case of sole proprietary form of business and partnership form of business, the continuity of the business is not guaranteed, because when that sole proprietor dies, business comes to an end. If he becomes insane, because of his insanity, business comes to an end. And whenever that sole proprietor loses interest in continuing the business, that time also business gets closed. Even in case of partnership form, when a partner retires, when a partner dies or becomes insolvent or becomes insane, under such circumstances, business comes to an end. But other partners, if they are willing, they can continue the business by forming a new agreement. But the important thing here is that the business will not be continued for a long period of time. In order to overcome the drawbacks of sole proprietary form of business and partnership form of business, company form of business organizations came up. The company form of business undertakings, developed. Here, what is a company? In today's class, we are going to study in brief the meaning and definition of a company and what are the different types of companies. Next one is what are the important features of company. Okay, let us study the meaning of company. Here, company refers to a legal entity which is formed by registration as per the Companies Act of 2013. Therefore, here we can give the meaning of company like this. It is an association of persons created by law. Just to try to understand, it is an association of persons registered or incorporated as per the Companies Act of 2013. Therefore, we can say that it is an association of persons. Here, persons, those who are interested, can set up the company. But here, the formation of the company depends on the rules and regulations or the procedure which is mentioned in the Companies Act. But here, simple definition of a company can be given like this. It is an artificial person. It is an artificial person created by law with a common seal and perpetual succession with limited liability. Try to understand. Very simple thing is that. Okay. Here, company can be defined in simple terms like this. It is an artificial person created by law. Who is creating this company? Law is creating this company. This company is called as an artificial person. We are natural persons. Being natural persons, we can enter into contract or agreement with third parties. We can make the agreement while making the purchases of materials, machinery, or other what you call the resources which are required for running the business. But here, being artificial person, a company can also enter into contracts with other persons. A company can also purchase the assets in its own name, and company can also go to the court of law in its own name, and company can sue others, and company can also be sued by others. This is as per the Companies Act of 2013. That is why here, by following the rules and regulations of the Companies Act, when it is created, it gets the status. What type of status it gets? It is an artificial person. It can enter into contracts. It can also make the agreements with the third parties. And here, the common seal is used on each and every document. It means for every document, the company's seal is required to be affixed. In case if the company seal is not affixed on the documents, such documents are not considered as valid. That is why here common seal will also be there. But since the company is an artificial person, it can't put the signature. Instead, it can, the common seal can be used on each and every document that should be attested by the board of directors. Here, the company's next important feature is perpetual succession. What is the meaning of perpetual succession? A long life. A long life. What is the meaning of this? See, in case of sole proprietary form and partnership form of business, business comes to an end when the owner dies, when the owner what you call loses interest, or when the owner becomes insane. Business comes to an end. See, in case of company form of business, the company's life is a long life, we say. Why? Because here the continuity of the business is not affected by the death, lunacy or insolvency of its members. That is why here perpetual succession is one of the very important advantage or the merit of a company form of business organization. Here, in case of sole proprietary form and partnership form of business, we can't give the guarantee of continuity, whereas in case of company form of business, the company form of business will be there for a long period of time, and it is not affected by the death, lunacy or insolvency of its members. And the next important feature of the company form of business is limited liability. What is the meaning of limited liability? Here, the shareholder's liability is limited only to the extent of his investment. I give one simple example. Assume that Mr. X has purchased the shares worth rupees 10,000 of one particular company. Here, X's liability is to the maximum rupees 10,000, not more than that. Assume Mr. Y, he has purchased shares worth rupees 50,000. His liability is only to the extent of his investment. How much amount he is interested to invest? Rupees 50,000. Therefore, here Y's liability is limited only to the extent of his investment, that is rupees 50,000. Assume so far X has paid rupees 6,000 to the company and Mr. Y has paid rupees 35,000 to the company. When a company suffers heavy loss, if company is wound up, under such circumstances, members of the company are not going to lose their private properties. As in case of sole proprietary form of business and partnership form of business, the proprietors, they lose even their private properties in case of heavy loss of the business. But here, in case of company form of business, the shareholders are not going to lose their personal properties. Because of that reason, many people take interest in investing companies. Therefore, here the liability of the members or the shareholders is limited only to the extent of investment. The company is not going to collect even 1 rupee extra from the shareholders apart from the whatever the amount they have invested in the business. This is called as the limited liability. See, on the basis of this, we can say that there are different features of business. Number one, it is a legal entity. It is a separate legal entity, we can say. Separate legal entity in the sense it comes into existence by law. That is why it gets a status, legal entity. Next one is it is separate from its members. That is very important point here. Whenever the amount is invested by the shareholders, here shareholders are different and the company is different because it gets a special status. It is considered as an artificial person. It is created by law. That is why here it gets a legal what you call status. This is the first thing. Next one is it is considered as an artificial person. This is the second feature. Next one is it is created by law. Next one is it uses the common seal on which the name of the company is engraved and it is affixed on all the important documents of the company. It has got a perpetual succession, long life is there, and in the similar way, the limited liability is one of the important features of a company form of business. Like this, we can say that company form of business is better as compared to the sole proprietary form of business and partnership form of business. One thing is how a company comes into existence. Here the registration is very necessary. Therefore, for the registration, they need to prepare so many important documents. The registration process is a lengthy process. That is why a company cannot come into existence so easily because of so many legal procedures. Unless the procedures are completed, company will not get its name registered as per the Companies Act of 2013. That is why here, compared to sole proprietary form and partnership form of business, the formation of the company is very complex and complicated, and it is not so easy. See, now I am going to explain in brief the different types of companies, kinds of company, on the basis of liability. On the basis of liability of members, the company may be classified into companies limited by shares, companies limited by shares. Next one is companies limited by guarantee. In brief, I will explain. Companies limited by guarantee. Next one is unlimited companies. Unlimited companies. On the basis of number of members, companies may be divided into public company, number one, public company, and private company. Let us see in brief what is the meaning of companies limited by shares. Here the term limited, unlimited, see, these are the terms which we use, or which are pertaining to the liability of the members. Here company is limited by shares means here the members' liability is limited only to the extent of the amount invested by them in shares of the company. That is why here I gave the example just now. See, Mr. X purchases the shares worth rupees 10,000. Here X is the shareholder. In case if the company is wound up due to heavy loss, in that case Mr. X is going to lose to the maximum rupees 10,000, not more than that. This is called as companies limited by shares. Next one is companies limited by guarantee. Here the members will assure the company, they will undertake a certain sum of money to pay at the time of winding up of the company. You know, that assured amount will be given at the time of winding up of the company by the members. Therefore, their liability is limited only to the extent of the guarantee assured or guarantee given by them to the company. I hope you are understanding. It is very simple thing. Companies limited by guarantee means the members of the company, shareholders of the company, they give the assurance, they give the guarantee to the company that a certain sum of money will be paid at the time of winding up of the company. Whatever the amount they have undertaken to pay at the time of winding up of the company only will be paid at the time of winding up, but not more than that. That is why here the guaranteed amount is nothing but the liability of such members. Therefore, it is called as companies limited by guarantee. Next one is unlimited companies, as the word clearly says that unlimited. Unlimited in the sense the liability of the members is unlimited. Unlimited in the sense in case if the business properties are not sufficient to discharge the outside liabilities in full, under such circumstances, even the private properties belonging to the members will be taken into consideration for discharging such liabilities. That is why here members are going to lose not only the amount which they have invested into the business, but also they are going to lose their personal properties as well. Next one is on the basis of number of members, the company can be classified into two types. One is the public company, next one is private company. What is the meaning of public company? Here, in order to form a public company, minimum number of members required is 7 and maximum is unlimited. Maximum is unlimited. Number of members required to form a public company is 7. This is the minimum limit, and maximum limit is not there. That is the reason here huge amount of capital can easily be collected from the public by receiving the shares by the company. Next one is in case of a private company, the minimum number of members required is 2. 2 members will be there. Next one is maximum is fixed here 200 members. 200 members. Since the maximum number is fixed here, the maximum amount of capital cannot be collected by the private companies. Next one is, in case of a public company, shares can easily be transferred. Transferability of the shares is permitted there. But in case of a private company, restriction is there with regard to the transferability of the shares. This is the next difference. Next one is, in case of uh, public company, the huge amount of capital can be collected, but whereas in case of private companies, the huge amount of capital can't be collected so easily. Therefore, these are the important, what you call, types of companies on the basis of their liability and on the basis of the number of members.